All right. Yes, so welcome, ladies and gentlemen, on behalf of Greatsoft. Thank you for joining us this afternoon. I'd like to welcome to the SARS AmaBillions seminar today. Today's theme, of course, is the SARS Audit Preparedness webinar series. The presentation will be about 1 hour and then with some time for Q&A at the end. So we will aim to finish the session at 4:30. If you have any questions during the presentation, please list them in the Q&A box. The team will keep an eye on it. We'll aim to deal with the questions mainly at the end of the presentation, just to make sure that the presentation runs well. But if I pick up anything in the Q&A box that's relevant to the discussion at the time, Daniel, if that's okay with you, I'll interject so that we can maybe deal with those relevant questions. This is then, of course, the first of 3 webinars. Next webinar is coming up on the 26th of October with the theme there, Corporate Income Tax Audits, Transfer Pricing Trends and Defense Strategies. And then the last one in the series is on 6th November with the theme SARS, Managing a SARS Audit from Verification to Objection and Case Studies. This webinar, of course, is titled Understanding the SARS Audit Process and Tax Risk Triggers. So keep an eye out for the invitations that will follow shortly. To register for those events, you have to register separately for each event. So please join us for those events. The purpose of this webinar series is, of course, in reaction to the SARS announcement or the National Treasury announcement that SARS is getting 75 billion rand worth of extra budget in the next medium term to collect more tax revenue. Historically, such targets has led to intensified audits, particularly for companies and high net worth individuals. So in anticipation of this significant increase, we thought it good to host this webinar series. It's been designed to help tax practitioners and corporates navigate SARS audits and effectively defend your position. So we hope you find it informative. I'm sure you will. And without further ado, I'd like to introduce Dr. Daniel Erasmus. Dr. Erasmus holds a PhD in tax and constitutional law and serves as an adjunct professor of international tax and transfer pricing. He specializes in tax controversy with a broad focus on complex domestic and international tax matters, and particular emphasis on tax disputes and tax risk management. With over 30 years of experience, his expertise spans all aspects of tax planning, administrative proceedings before revenue authorities and tax litigation. Dr. Erasmus is clearly an expert in the field, so I'm sure we will all benefit from what he has to say to us. Dr. Erasmus, thank you for joining us, and over to you.
Thanks, Willem. Just want to make sure, can everyone see the slide pack? And my camera says I'm on, but I don't see my particular picture on the screen. I just want to make sure that you can see everything.
Yes, Daniel, we can see it perfectly. No problem whatsoever. I think you are in your PowerPoint mode, not in the slide presentation mode. So you might want to switch that over just to make the slides bigger. I'm not too sure if you can do that at your end.
Can it just, what happens is it takes over my whole computer. Are you able to see the slide?
Yes.
Wording, because that's pretty big now.
Yes, we can
I know
see
it's not in the slide. Okay, so Willem, just a point of clarification. The second seminar, I think, is on the 22nd. The 26th is a Sunday. I think you might have just misstated the date.
Yes, I apologize. It is on the 26th.
No problem. I just wanted so that people. Okay, all right. So the second seminar is on the 22nd, and then the third one is on the 6th of November. So morning, everyone, or afternoon. I'm presenting from across the ocean out of West Palm Beach in Florida. So I'm in a totally different time zone to all of you. This seminar series is really a repeat of an in-person seminar series I did in South Africa at the beginning of September, focusing on this initiative of SARS to collect more revenue, the AmaBillions announcement made by the Commissioner earlier this year. And that has now been bolstered by the Honey Badger initiative. I'm not sure if you've heard of it, but this is where they intend intensifying criminal charges where they believe that the taxpayer might have committed any type of fraud. Unfortunately, the sections in the Tax Administration Act and the Income Tax Act are oftentimes used as we refer to in Afrikaans as a lot to get taxpayers to comply. And my experience is that you, as small business or medium-sized business owners, I'm taking that's the majority of my audience, as well as the advisors to those businesses, are oftentimes not equipped with the necessary knowledge on how to deal with that. And that's not because your advisors or you in any manner are incompetent. That's not what I'm saying. It's a highly specialized area of the law. And there are many lawyers or attorneys that don't fully know and understand that area of expertise. And it's a very niche area, but an important one. And it's very important that you align yourself with the correct advice very early on in any of the audit, and especially if they intend conducting a criminal investigation. The problem with the way that these things happen is that SARS will commence an investigation which looks like a civil investigation. In other words, they simply just auditing your tax affairs as they are entitled to, and they have tremendous powers to do so. And before you know it, they, for some reason, decide that they are going to convert this into some sort of criminal investigation, and they are supposed to notify you when that happens. That doesn't always occur, and it's a very important event because the rules of engagement, we have in a rugby match, there are a set standard of rules. There's always a referee that ensures that everybody abides by the rules. Sometimes people get away with it because the referee doesn't see it, and things happen behind the scenes that the referee didn't pick up. In our game, where we have at the opposite side of the field, the South African Revenue Services, the referee is the Constitution. And the Constitution is only effective if you or your advisors are aware of what your fundamental rights are. And I'm sure that all of you are listening to this thinking, well, okay, that's great. We've got this wonderful Constitution, but how does it apply to us? And I'm not about to embark upon a Constitution lecture, but there are certain elements that are really important for you to remember. And if you remember in the sense that you know when to get the right sort of advice involved early on in the process. And my sponsors for today's talk is first and foremost Greatsoft. And I would take most of you are clients of Greatsoft or contemplating on becoming clients, in the sense that they offer a very effective package to you to assist you with all the reporting requirements and compliance requirements that you are expected to keep up to date in your dealings with SARS, who not only is the counterparty or your opponent in this game, but happens to be a very big shareholder in your business. And I'll expand on that as we develop the talk. But the point that I'm trying to make is unless you are a very large organization that can afford to have a tax executive and an in-house tax team, and even those people don't have the knowledge that I'm referencing now, you as a smaller business are not going to have that kind of budget in order to survive and make a living and get ahead in life. And so the second sponsor in the series of webinars that I'm conducting is taxrisk.co.za, represented by Willem Lombard here today, and he'll give you some insights. But I do want to mention what they do, because it segues into a lot of what I have to present to you. And what taxrisk.co.za does, literally for the price of a few cappuccinos in South Africa per month, is to provide you with a tax risk insurance that you're able to kick into play immediately any type of audit commences with SARS. I want you to reflect on that. So the moment that SARS notifies you that you are the subject of an investigation, you are entitled to claim under the policy, and the effect of that is simply to switch on the engines of specialists like myself and the teams that I work with, where we have, over the last 2 decades, really cut our teeth on this type of engagement with the South African Revenue Services. And just to preface that, and to give you just a little bit of background, in my career, I have now represented roughly between $3 and $4 billion worth of revised assessments. And I'm talking about US dollars. So we're talking about a significant amount in rands. And of those disputes where we have represented clients, our clients on average, so if we take everything that we've done and we average it, our clients have paid out less than 3%. So what does that tell you? That tells you that we're brilliant at what we do. Well, we'd like to think that we're very good, but it tells me that there are a lot of mistakes that the South African Revenue Service and other revenue services make. And those mistakes are the things that you need to be alive to and to be able to look out for in order to protect your business and the spill out effect that will take place. Not just the revised assessments and the penalties, but this threat of criminal procedure being embarked against you. And this is a sort of a modus operandi of SARS that took place many years ago. One of the big cases that I represented many years back was Ivan Corza. So those of you who've been around for long enough might recall that Ivan Corza was the owner of one of the Orlando Pirates soccer club, but also a very well-known businessman in the Black community and highly respected. And it was during the era of our second president, and there was a lot of political play taking place, and I'm not going to bore you with those facts, but for some reason, Ivan Corza became a target, and they used the South African Revenue Services under Pravin Gordhan to go out against him. And what they did is pursue him vociferously and aggressively, trying to show him up as being a tax fraud. And it was all over the papers. I mean, it was just a constant barrage of news reports about this investigation, trying to make an example of this very successful businessman in that community. And the upshot of it was when the South African Revenue Services decided to conduct a raid on his premises in order to attach documentation in an attempt to start, in starting this investigation, to show him up as having committed some sort of tax offense. Interestingly enough, the one investigator who entered his premises, so now they come in with a search and seizure warrant specifically for the purposes of attaching tax-related documentation or evidence to try and bolster what their suspicions were that he was committing some sort of tax fraud. In the process of conducting that search and seizure, they happened to notice an old 303 weapon that was attached to his wall as in a display cabinet, which had the bolt fastened. So you couldn't. It wasn't a rifle that you could shoot with. It was merely a collector's piece. But the official in charge of that particular search and seizure investigation thought it a clever move to call in the South African police to have Mr. Ivan Corza arrested on the basis that he was committing another offense quite outside the auspices of the tax investigation that was ongoing. And so you'd think that's something that is possible and that can be done. Well, no, it cannot be done. So the interesting thing is the fact that SARS has got these tremendous powers where they can enter, and they don't have to conduct a search and seizure. They can simply write to you, and then you are obliged to give them information. In fact, you are, I use the word obliged. You must give them the information. And if you don't give them the information, not only can they issue revised assessments against you based on whatever their suspicions are, but they can actually penalize you and cite you for various criminal penalties if you don't do so. So you are compelled to give the information to SARS. And the other way that they can do it is a search and seizure warrant. But that is only specific to the offense or the potential offense of a tax avoidance, or not a tax avoidance, a tax evasion, or a tax investigation. They cannot use that power to effectively embark upon a secondary criminal investigation, as is the case what they attempted to do with Ivan Koza, and that is to have him arrested for having a gun in his possession where he did not have the appropriate license. It was a collector's piece, but that's besides the point. The fact that they introduced the SAP at that stage, that was unlawful conduct on the part of SARS, and that conduct could immediately be set aside. And so I mentioned the Constitution, and I wanted to mention this very early on in this talk because it's such an important part of what's happening right now with SARS investigations. SARS is entitled to investigate your affairs in order to determine whether you have reported your taxes correctly, whether it be customs and excise, income tax, VAT, whatever the case may be, diesel rebates. I mean, there's a long list of items that they're entitled to audit. But they're only entitled because they are compelling you to give that information by virtue of the notifications that they issue to you. So you are compelled to give them that information. Now, I want you to stop there. Most of you have watched movies where the Miranda rights are read out to a potential, I'm not saying a potential criminal, when they're arrested. Anything you say or do can be held against you in a court of law. You have the right to remain silent. In other words, you cannot be compelled in the event of an arrest or an event of an investigation you cannot be compelled to give information to the authority, in that case, the police that is investigating you. You're entitled to call for an attorney, keep your mouth shut, and only respond via an attorney, which is often the way things are done because you don't want to say anything that might incriminate you. And the point is you cannot be compelled to give incriminating evidence. But that is different with the Income Tax Act, because here with the notifications, you are compelled. You have to do it. So it's one of the exceptions in our Constitution where you are compelled to give that information. And that is very important to understand what that means. There's a quid pro quo. In doing so, in transgressing what is a fundamental right that you have as a citizen in terms of the Constitution, where you are now being compelled to give this information to SARS so that they can conduct a financial investigation into your affairs, what that means, and it's not written as such in the Tax Administration Act or in any of the revenue acts or tax acts that govern the taxes that you have to pay. What it means is that information that you are being compelled to give, that information cannot be used against you in a criminal investigation. So I want you to just stop for a moment and reflect on that. So where you have handed over information in being compelled to assist them in conducting an investigation into your financial affairs, if they decide, and this is what they do, to convert it into a criminal investigation, they have to, in effect, create a separate file. Now, whether that happens or not, that's a different question. And I would venture to guess that often it doesn't happen because the parties that are doing the investigation within SARS, the civil investigation that I referred to versus the criminal investigation, I can tell you now, in my experience, many of these people have not been properly trained, and hopefully that changes and will change. And so they don't fully understand what I'm explaining to you now. So a separate file has to be created, and whatever evidence you have given them under compulsion, under the initial tax investigation that has taken place, that information cannot just simply find its way into the folder of the criminal investigator. And they have to now conduct their investigation on the basis of obtaining whatever information they can via the processes and procedures that allow them to do so, which is typically by way of search and seizure. To the extent that they rely on information that was obtained from you in the civil normal tax audit investigation, and that finds its way into the criminal file, then the obvious defense down the line, should they now pursue you for criminal charges, would be that in terms of the Constitution, you are given the guarantee that any information that you have shared with them under compulsion cannot be used against you. That in a criminal charge. That evidence has been tainted. Now, I'm not going to go deeper into this other than to leave the discussion there, but you can understand that just the simple explanation I've given you now involves a lot of nuanced law, case law, constitutional law that's not just been developed in this country, but in other jurisdictions, such as the United States and in Canada. It's a highly specialized area. I simply happen to know about it because, as Willem announced in my introduction, my title is I have a doctorate. My PhD was specifically in constitutional law and tax audits. So I had the opportunity to interrogate, research, and write about that particular subject area extensively many years ago. And so I have a very good understanding of the development of that law. And it becomes important where we are in South Africa at the moment, because we have this aggressive drive by SARS to collect this additional revenue. And at the same time, they've initiated this honey badger initiative to pursue taxpayers with criminal charges. And I can foresee that there's going to be a very big mix between these two. And the transgressions that I've alluded to in my introductory chat this morning or this afternoon, your time, I have no doubt that there are going to be many transgressions. And I refer back to my track record where clients on average have paid less than 3%, which doesn't just show that we're very good at what we're doing. It shows that the revenue service, make a lot of mistakes. And it's those mistakes that you have to be and should be alive to right from the inception of any investigation. And for that reason, you should have the right team on your side from inception. And it's not good enough that you simply rely on. Again, I'm not trying to slate or say anything negative about your accounting advisors or the auditors that you use. These are people that usually are very highly skilled in tax compliance. I have no beef with that. I fully support them, and I support that industry. My support comes from helping those accountants and auditors with this very tricky area of the law. And we can only do so if we are introduced into the equation, into this emerging dispute very early on. And if you are a smaller business and you don't have deep enough pockets to be able to just simply bring in a team of that nature to assist your auditors and accountants with ensuring that SARS toes the line 100%, and you don't have the sort of mix-up of information between a civil and criminal audit, the tax policy, the taxrisk.co.za policy becomes something that is extremely important and something that you would be silly not to take advantage of it. So it sounds like a hard punt, and maybe it is, but I got involved in this particular process nearly 2 decades ago for this particular reason. I usually act for very large organizations that have got deep enough pockets to be able to afford these specialist lawyers to be able to represent them properly. Smaller businesses just do not have that type of funding available. And it's just unfair that they cannot take advantage of those same defenses that these large taxpayers have. And the advice that I took at the time was the best way to do that and to make it available to smaller taxpayers and to smaller businesses would be through the process of a policy. So we're not just trying to sell this financial instrument so that the policyholder makes all this money, but our track record, and I having worked with them, has been to bend over backwards to represent clients, and the facility has been created so that you would have that advantage made available to you. So I wanted to just promote that right up front because it plays a role as we go deeper into my discussion this morning and this afternoon. And also, I wanted to bring your attention to the fact that it's not just an aggressive tax audit drive by SARS. They've now attached this honey badger criminal process to it, and that makes me suspicious. And I just know that a lot of taxpayers are going to face horrible threats. And there's nothing worse than being threatened with a criminal charge. It's bad enough facing a tax audit and what might come out of that. But then having to face criminal charges as well, that's really not a nice process to have to go through. And in my career, I've represented taxpayers in that particular area of dispute. Not nice for them. We've usually been very, to the best of my recollection, we've always been successful, but it's a process. And whilst you're representing these people and making presentations to the prosecutors to tell them that whatever information they're trying to rely on is not admissible in court, you as the taxpayer on the sidelines are sitting there worrying about whether or not you're going to be facing a criminal trial and the potential of some sort of judgment being taken against you and having to face a jail sentence and all the horrible things that go with that. So very important that you take cognizance of that. Maybe, is there anything that anybody wants to ask before I now sort of move into the content of the rest of my lecture? I just felt it's a really important part of what I need to convey to all of you. And if you want to ask a question later, by all means do so. Right, so has been sort of designed to address issues that typically arrive in a smaller business. So my presentation is aimed at smaller businesses. And as I said to you before, larger businesses can usually afford an in-house tax department, and hopefully they're running a tax risk management committee, which again, in my experience, I see most of them don't, where they're able to identify emerging risks. Now, SARS is no longer auditing in a reactive matter. They are conducting their audits in a very strategic, data-driven, with AI-driven assistance. So understanding how the audit process works is the first step to protecting yourself and your business before any of those risks turn into a revised assessment. And so we're talking about an audit that they would ultimately turn into a revised assessment. Hopefully by the end of the session, you will know how SARS decides to audit and what happens during that audit, and most importantly, what you can do to stay off the radar or manage an audit smartly if one and on risk. Right, let's move on to. Sorry, so this does happen. I sometimes go off on a tangent, and then, so we covered that slide. Right. Oh, sorry. Right. Slide. It is clear from the announcement, and I think from more recent announcements, that some of the additional revenue that SARS has been collecting has not been from new taxes, but has been from conducting audits. Their data matching capability now spans bank accounts, customer records, CIPC filings, and even social media activity. So just reflect on that, because everybody is in some form or manner has a Facebook account, has an Instagram account, and there's a myriad of other. Those accounts are being monitored. So let's say you bought a new bakkie and you posted it on Instagram, and your declared income doesn't match that lifestyle. You might pop up as a red flag for audit purposes. So the random era of random audits is over. Audits are now risk profiled and behavior based, and you need to be aware of that. So we'll unpack how SARS conducts these audits, what are the risk triggers, and how to prepare yourself for those audits. By now you should know that conducts three basic categories of audits. It might be broader, but in the main, a verification audit, which is a desk review. For example, you claimed a 50,000 Rand VAT refund. SARS might want the supporting invoices. Then there's a audit proper, or a tax audit, or just audit, a deeper dive often involving field work or specific technical issues like transfer pricing, management fees, not just reconciliation, something deeper than that, and then a fully fledged investigation, sort of from a more serious level, just in terms of the way in which the correspondence is addressed to you. Now, each step increases intensity, obligations, and potential penalties. Let's say you run a plumbing business, and a simple VAT verification might become an audit if SARS notices that your input VAT is consistently high. Then you would become the subject of an investigation. But I want to point something out to you that happens often. So you oftentimes will receive verification notification from SARS, and you'll be expected to submit figures to them. And I have heard many times that's not where it ends. SARS then ends up issuing a revised assessment. Now, there's a big fault on the part of SARS. At the time that you respond to any verification audit, it is very important that you point out to SARS, and I want you just to note this, and I'm going to go into it in much more detail. You point out to SARS if they do not accept the numbers provided by you, and this is going to cause them to trigger the next step, which typically happens to be the issuing of a revised assessment. They must remember that in terms of Section 42 of the Tax Administration Act, they are obliged, I repeat, obliged to issue a letter of findings explaining to you what they're going to do, why they're doing it, and to give you a minimum of 21 days within which to respond to their letter of findings before they issue a revised assessment. Section 42, letter of findings. Please remember that that is something you must remind them of at that point, so that if they simply now issue a revised assessment, the issuance of that revised assessment is unlawful, and that assessment can immediately be set aside, which I'll explain to you a little later on. I need you just to note at that point where you have this verification audit, SARS cannot just issue a revised assessment. Now, that brings me to the legal framework. And so a very important area that all of you should be aware of, especially advisors. You should take extra special care and understanding and knowing these sections backwards from the Tax Administration Act. So SARS can only perform its powers. Remember my example of Urban Causa? They can't bring in the SAP. They can only focus on that which the Act allows them to do. SARS is like a robot. The programming of that robot must emanate from specific sections in one or more of the revenue or tax administration legislation that exists. They cannot simply do whatever they want to do. Whatever they do has to be underpinned by a specific section in the Act. So Section 46, SARS has the power to request relevant material. Relevant material is an important word, but not for us to unpack it at this point. 47, the notice requirements for a field audit or interview. 48, SARS has power to enter the business premises. Again, they comply 100% with what those sections entitle and allow them to do. Otherwise, their conduct is unlawful. And importantly, Section 42, SARS's obligation to issue audit progress letters, and, as I've already mentioned, the letter of findings before any revised assessment. Why does this matter? Because if SARS skips a step, for example, issues an assessment without a proper letter of findings, that assessment can be challenged and set aside. And the same goes for each and every one of the other steps that SARS takes. Now, there are several tax court judgments confirming what I'm telling you now, which I will unpack in my later seminars. Not enough time to do so today. So knowing your rights under the Tax Administration Act, where I gave you that short sort of introduction on the Constitution, is your first layer of defense. And it's very important that your team understands how to initiate that. And here it is appropriate for me to tell you that the taxrisk.co.za policy immediately kicks into play at this point. So the moment that that tax audit becomes a tax audit, or the verification audit suspiciously becomes this revised assessment that's issued against you, you would have then initiated contact through Tax Risk.co.za, who would then put you in touch with one of the specialist teams, and they will then immediately initiate the steps to bring the appropriate High Court application without any questions asked. So it doesn't matter how big the revised assessment is. I was given an example in my recent seminar series in South Africa. I was told, well, typically it's a 30,000 Rand assessment, but for us to go and instruct a firm of attorneys to do this will cost at least 80,000. And my answer was, well, if you had the policy, it would cost you nothing. It would have cost you the premium, which is negligible. So it doesn't matter what that 80,000 cost is. The team is switched on immediately to engage and to then enter into the dispute. And I can assure you, if they have failed to issue the letter of findings, probably 10 out of 10 cases, again, one can't be, there might be some reason, some other reason that comes into it, but I can tell you now that the moment we issue notification to SARS that we're about to bring that application, it goes to their legal department, and their legal department realizes that the assessor has messed up and has failed to take a peremptory, obligatory step, and that's the end of the matter. The assessment gets withdrawn. So please, that's a very important step to remember. All right, let's go on to the next slide, the 7 stages of the SARS audit. Selection. SARS identifies high-risk taxpayers using analytics and profiling. So the days where you thought you'd just be black marked because you had offended somebody, those days are gone. SARS works on sophisticated information made available to them. Notification. You will receive a formal notice. Always check that it clearly identifies the tax type and the period under review, as well as the correct referencing number. And it's very important that the correct reference number is in fact inserted in the correspondence that takes place between you and SARS. So for instance, in the Tax Administration Act, if the incorrect reference number has not been quoted in your correspondence, they can simply ignore what you are writing to them, and you don't want to have that happen. So most of this information is probably going to be submitted to them through the e-filing portal. But again, remember, there are a multiplicity of taxes that might be the subject of an investigation, and not all of them you would correspond through the e-filing portal with SARS. And in filing or in obtaining that notification, it is very important that you respond. And I'll come back to that another time. Right, now, information request, usually within 21 days, you must submit records under Section 46. So it's important that you respond correctly. And again, I'm going to come back to that. Field audit, SARS may visit your premises to inspect records if you staff. Now, if that ever happens, again, if you want the correct representation with you to ensure that you are not doing something that you don't have to do, and that SARS is conducting its audit within the parameters of what they have specified. So it's very important that you know exactly what they're auditing and what tax it is that they're auditing. They can't just go onto a fishing expedition. It's a very important point. Right, and then we've already mentioned the preliminary findings. It's the next step. SARS must issue a letter of findings to give you an opportunity to respond before they issue a revised assessment. And then you would have the actual additional assessment raised, and then you enter into the dispute phase where you can object. And before objection, you would oftentimes ask for reasons for the assessment. And that's where a confusion comes in a lot of the time. A lot of the advisors you speak to say, forget about the letter of findings, but they are aware of requesting reasons after the additional assessment. That's too late. You're entitled to request reasons anyway, but you should have addressed the reasons out of the letter of findings before the revised assessment. And I keep repeating that because for some reason, people just don't take to this point. Yes, you are entitled to reasons after the assessment, but you should have gotten them. You should have done this at the time of the letter. And of course, from there you can object, appeal, ADR, end up going to the tax court. And that's really what we want to avoid, because that's a painful process. It's very time consuming. A lot of heinous evidentiary rules come into play, and I'm not going to bore you with those details, but they all carry deadlines, and a tremendous amount of effort has to go into preparing to go to a tax trial. All right. Right. Let's look at common breaches by systems. So the next slide is common procedural breaches.
Daniel?
Yes. Yeah.
Just to interject at this stage, we have a question from Kulani, which I think is relevant. He asks, where do we draw the line between a verification and an audit?
Okay, so let me try and explain that again, because that seems to be and thank you for the question. That is a question that I face numerous times and repeated in the same presentation. And I'm not sure to me, it just seems so obvious, but it's not so obvious to everybody else. A verification is really meant for SARS to verify numbers on something they've picked up, be it reconciling a bank account against a tax return, reconciling turnovers against VAT returns, whatever, where they've picked up some form of discrepancy. And they're now asking you, or they're asking you for proof of certain expenses or whatever the case may be. You will respond to that. Okay. That response should be the end of the verification. If SARS takes your response and doesn't close out the matter, so now they disagree with it for some reason, then it becomes a tax audit proper, which means at that point, if they're going to take another step, they need to give you a letter of findings. So what did I say to you earlier? When you submit information under a verification, and typically the notice will say verification, and you're going to do this through e-filing, it is important that when you make those numbers available to SARS addressing their verification questions, you say to them, here is the information you've requested. We believe that this should satisfy you as to verifying whatever it is that you're asking for. However, if you disagree for whatever reason with what we have submitted, and you believe that you need to take as SARS an additional step, such as raising an additional assessment, we want to remind you that Section 42 of the Tax Administration Act places an obligation on you to provide us with a letter of findings before you issue any additional assessment, and we are entitled to respond thereto before you issue an additional assessment. So hopefully that makes it clear. So you want to, on every verification audit, you want to respond in such a way that you make it clear to SARS that you expect some form of letter of findings from them before an additional assessment. And you need to remind them of that, because it appears to me that many of the assessors that are conducting these verification audits are under tremendous pressure to issue revised assessments, and they simply skip that step. If they skip that step, as I've said to you, the additional assessment that is being raised is unlawful, and we can set it aside, which means the assessment disappears. But it doesn't disappear automatically. You've got to take the necessary steps to do so. So you might as well warn them up front that they need to issue a letter of findings before they do so. So I hope that answers the question. I am going to delve into this much deeper in a later webinar, but I think that's sufficient for now. So, well, we're now, getting to some of the the common sort of problems that we pick up. So, SARS, as I said, makes many mistakes, and some of the common mistakes are that no proper audit notice was served. And I've mentioned that already. It's important that the notification specifies what tax is being looked at, what is being audited. And you are to write back to SARS to say, look, in order to assist you in conducting this audit, we need to understand what it is that you're auditing. What is it that you're looking at? What are your concerns? And we understand we're not trying to tell you what you can and what you can't audit. We're simply trying to focus on what is important to you. And we understand that in focusing, it might go a little bit broader down the line, but for the purposes of where we are right now, please just help us to help you to give you the correct information. The next place that they oftentimes mess up is the failure to issue the letter of findings, which I've addressed. They don't give you a reasonable time to respond. So, oftentimes you will get a notification, you've got 14 days. Well, typically the Tax Administration Act gives you 21 days. So write back to them and say, look, normally the period that is given to a taxpayer is 21 days. We are short-staffed in this particular area, which most people are. You don't have somebody available instantaneously to do so. Ask them for an extension. Ask them for more time. Expanding on the scope of the audit beyond what was originally stated. Again, it's very important that you are able to address what the scope of that audit is initially. And if SARS wants to expand it, then you would ask them, why are you expanding it and what are your concerns? So let me give you an example. Some years ago, I acted for a large mining company that had been approached by SARS to audit particular wear and tear allowances that had been claimed and related areas. Big audit. And based on the advice I gave, a letter of engagement was entered into with SARS. We wrote back to SARS and said, we just want to confirm and agree with you that these are the areas that are being audited so that we can focus on what type of information we need to give you. And that information was given to them in detail. And it's important that you address the matter properly and that you give them the information that they require, and specifically that information, no more, no less. That was submitted. We heard nothing from SARS, no follow-up report. And it so happened that the prescription of that period that was under investigation was going to come up in the next week. Lo and behold, SARS all of a sudden issues a letter of findings, which I've told you they have to, okay? But in that particular instance, the letter of findings was generic. It didn't address the areas that we had agreed with them were being audited, on which we had provided them with information. So we wrote back and we said, we understand that you're attempting to issue or draft a letter of findings, but this is not in line with what was agreed. The letter of findings should be addressing what is the scope of your tax audit, which are the following items on which we have sent you the following information on which we've received no response. So you are not in a position to issue a letter of findings as to what your next steps are, and we thus regard this letter of findings as being unlawful. And should it not be withdrawn, we will bring and are going to bring an urgent court application to do so, which we did because we knew that's what they were going to do. They'd issued a letter of findings and placed us under pressure to respond to it, to which we said, well, we can't, we've already responded to your queries specific to what the audit is about, and you have failed to address any of those concerns. This is not a letter of findings, and we launched an urgent application to the High Court to have it set aside. Needless to say, that was set down on a Monday. The Sunday night, the legal team of SARS, out of SARS's head office, phones me and says, no, they've looked into the matter. They would like to they're going to withdraw the letter of findings. And I said, that's fine, but we are going to go to court tomorrow because we've launched the application and we want this made an order of court. We want it made an order of court that you are withdrawing the letter of findings, and that's it. And what we'll give you in return is we won't ask for a cost order. And that's a different discussion for a different day. But anyway, they agreed to that. We went to court, got the court order. So the court never had the opportunity to listen to our arguments and write a judgment, which would have been useful for thousands of other taxpayers. But at least we got that matter, or the letter of findings, withdrawn. The effect of it was the next day that period prescribed, and what would have been tantamount to an excess of R1 billion revised assessment came to an end. And that was us now insisting that there be a letter of findings, but of course the letter of findings must address the scope of the audit, which it didn't, and so we applied under this urgent application to have that letter of findings set aside, and the result was no letter of findings. Therefore, they were unable to issue revised assessments. Therefore, the period under investigation prescribed. So again, it's just being alive to the mistakes that they make. Now, whether SARS had any cause to raise assessments, I don't know. I mean, the client was very specific about the information that they had given to SARS. Oftentimes there are interpretation differences. So it's not that the taxpayer has necessarily messed up in any particular way, but there could be, differences of opinion, differences in terms of how they interpret the laws. Well, all of that was off the table because the period in question had prescribed. So please do not underestimate the importance of actually addressing SARS on this. And I cite here two cases, IT 13726, which was a Port Elizabeth judgment, and I'll be going into this in more detail in a later webinar, where I, as the initial argument before the tax court, argued that SARS had failed to issue a letter of findings, and on that argument, the court issued judgment and set the assessment aside. So there is, when I say precedent, unfortunately, tax judgments do not form precedent as a High Court, Supreme Court, or Constitutional Court does, but they certainly are of persuasive value, and certainly this judgment stands. And then in Pretoria East was that famous case where SARS, on assumptions, attempted to revise certain VAT amounts, and fairly well-written judgment came out there to say SARS cannot just base it on assumptions and needs to look carefully at the facts and circumstances of the case concerned. So again, that's the thing that I will unpack in a later lecture with you. Now, technology and artificial intelligence. As I mentioned earlier, when it comes to, there are basically three pillars I would say that SARS would draw from. The first is third-party data integration. So, they've got these systems where they can pull in large databases, linking your bank data. We know that they're doing that, the CIPC records, customs records, and as well as records on payroll from employers. So, when you put all of that data into one big mixing pot, and you've written various algorithms, and you use artificial intelligence, enhanced with artificial intelligence, SARS can get a fairly accurate, not necessarily correct, but fairly accurate picture of what they think is going on, which will then trigger the questions and investigations against you. Now, these algorithms, which are driven through the AI technology that's available, will detect any anomalies and behavioral inconsistencies across the various tax types. And so it's a lot easier now for them to find those anomalies or inconsistencies which they can question you on, making your life a little more difficult. And then what this does is it will typically drive a tax risk score to determine the audit priority of the taxpayer. So it's not just this random selection process anymore. No doubt this data is being processed all the time, and then it's being ranked based on the size of the taxpayer and based on the risk profile of the taxpayer, and that in itself will then trigger the appropriate audit. they can't audit everybody, but certainly they will focus on those that that sort of rank high in what has been as an anomaly or inconsistency. Right. So what triggers a VAT audit? So let me just jump into, because we are starting to run out of time. The typical triggers are going to be what I would say are quantitative and qualitative. If we look at the quantitative, constant VAT refunds, declining profits with rising turnover, large management fees or related party payments, thin margins or persistent losses, fluctuating turnover versus cost ratios. I mean, the list is a long list. Mismatching of IRP5s, spikes or drops, sudden spikes or drops in turnover. Again, any type of thing that's unusual is going to come up on their radar screen and be rated, and will then determine whether or not there is to be an audit. Let's take an example of a small consultancy company. IT consulting company claims VAT refunds every quarter. So SARS compares their expense profile to industry norms and sees that 90% of their expenses are consulting fees to a particularly related company. That will obviously trigger a review, because they'll want to interrogate what that relationship is and whether that's an arm's length arrangement that is taking place on a multiplicity of levels. Another one would be, for instance, a restaurant that shows losses for, let's say, a 3-year period in a row while still expanding its locations. If that's not matched with let's say, a large investment having taken place, that's going to trigger an anomaly that would need to be addressed. And then if we look at next one would be qualitative triggers. Here, again, it's the conduct of the taxpayer. So here you're looking at areas where in the past, the taxpayer has a poor response rate on previous verification responses, inconsistent reporting across different tax types, likely that VAT sales are higher than income tax sales. That might trigger something. Offshore structures involving low tax jurisdictions, that's a popular one. High profile directors or politically exposed persons. So anybody who's high profiled is going to draw attention. Changes in shareholding or liquidations. Liquidations becomes an area where SARS is starting to look at to what extent executives or senior management might be held personally liable for the debts of that company, because they may have mismanaged something in the organization. So they're not just accepting liquidations as they are. You need to be highly sensitive to that. Lifestyle indicators. So we've all seen in the past lifestyle questionnaires. That is still very much on the radar screen. I've heard of many high net worth individuals being sent a letter saying that SARS have run have access to their bank accounts and have matched the funds going through their bank accounts to what's been reported in their tax returns. And to the extent that there is a mismatch, they are asked to explain. Another one is what's frequently happening now as we speak. Most people submit their first provisional tax return and pay the lowest sum. SARS is asking for more information about that, because they interpret the relevant section in the legislation to say that if you were aware of a transaction that would entitle you to that income sooner, you should have then increased your first provisional tax payment. And if you had not done so, that's a transgression. They're entitled to revise that provisional tax payment and slap on a penalty. So, that's an area that's getting a lot of attention. You have to be aware of those areas. SARS is becoming a lot more sectoral campaigns. So SARS doesn't just look at industries through various compliance campaigns. Examples might be the medical professions and legal practitioners, because it potentially is a cash economy. Construction and transport and the declaration of income, cryptocurrency traders and online influencers not declaring income stream. I note online influencers. So you've got people doing these influencer programs on YouTube, TikTok, or whatever the case may be. You know, they are generating income streams. Are those income streams being are they being declared? And then, of course, transfer pricing is a big issue for multinationals. Now, for small businesses, this means that you can get swept into an audit, not because you did something wrong, but because your particular industry is under review. So an example is a logistics firm. It might be that SARS is targeting diesel rebate claims. And although you're a small logistics company, you happen to get swept. You happen to checking on diesel rebates. And of course, there are the data sources, which I've mentioned before. They're looking at CIPC filings. They're looking at bank reports. They're looking at customs and excise data. They're looking at third-party returns. They are looking at cross-border data from the OECD, called a common reporting standard. And then they're also looking at social media. So I think it's important that you are very much alive to that. So if you're making all these fancy announcements in social media, that is going to be picked up and it's going to be cross-referenced to your tax return, to your bank accounts. And if something looks suspicious, you can accept that you are going. I think I've given enough. But just sort of bringing us to a close, your and I'm going to go into more detail on this in my later webinars. Firstly is governance. You must understand your tax responsibilities. Okay, and make sure that you are filing on time. Make sure that you respond to anything that you get from SARS on time and obtain the appropriate extension if needs be. And come across in a confident, not in a challenging, aggressive manner, but show confidence, show them that you understand what your rights are. Secondly, you must keep records. And this is a big problem with all businesses. Evidence is extremely important. So please keep your receipts, keep proof of why you've spent something on a particular transaction. If you've entered into a complex commercial transaction, make sure that it is documented. There are signed agreements in place. Those agreements reflect the transactions that have taken place. And as I've already mentioned, make sure early in any potential dispute process, you engage the correct professional people to assist you, not just your auditors and your accountants who are skilled at tax compliance, but honestly, and they'll be the first ones to recognize, not necessarily in the areas that I've alluded to in this particular talk. So please do not underestimate the importance of that. And if you can't afford that, then the policy is your answer. Right, then we look at documents. You know, keep a tax file index for each tax type in here. Maintain working papers, maintain agreements, record decisions made and why you entered into a particular transaction. And if a particular transaction is questionable, get an opinion from a person that is regarded as a tax advisor in the Tax Administration Act. And that typically would be your auditor, or it could be your accountant who is registered as a tax practitioner in terms of the Tax Administration Act. You know, any opinion that you have on file supporting a transaction that you have made will assist you in minimizing any penalties you may face down the line. So that is a very important step. You don't have to go to a fancy law firm to do that, but make sure that the person who is giving the opinion is in a position to do so, and do so effectively, and that will help you in mitigating Respond to SARS notices, acknowledge receipt, check the validity of the notice, clarify any ambiguities. There's nothing wrong with you corresponding with them. Only provide relevant information. Back in the old days, some people used to say, let them send them a truckload of box files. Now SARS can take that information and put it through a fast scanner and get a complete profile of your entire business. And I promise you, your audit immediately expands into this massive, massive technology today. That trick doesn't work anymore. You need to be very specific and focused. And the more you can focus them on a specific audit, the better for you as to the outcome that might emerge. And then those first responses are very important. And I reiterate the importance of making sure that specify that SARS must give you a letter of findings. Timelines. Timelines. I've already mentioned this. Remember Section 42, letter of findings. Typically, you have 21 business days and address every issue. So when you get to responding, respond properly. Respond with a good explanation backed up with the evidence to support you. And then ask SARS if they do not accept your explanation and the evidence presented by you, that you expect them to address that fully in your letter of findings. And the nice thing about you having the opportunity to respond in the letter of findings is you have a second bite of the cherry to convince them that they are wrong. And once again, they have to take that into account, and that plays out further into the dispute process, which is something I'll go into in a later webinar. So you have multiple opportunities to explain yourself. Use those opportunities, because SARS's decision-making process cannot be arbitrary. It's got to be rational. It's got to be reasonable. It's got to be based on substantive, good reasons for it doing so. Unless there's a reason for them to ignore what you have given to them, they are obliged to take it into account. And if their conclusion is arbitrary to the information that you have provided them, they have problems. Just like I explained in that mining case, where SARS issued this generic letter of findings. It didn't address the specific areas that were agreed upon in the tax audit and on which specific information was given. So a similar circumstance arises every time you give detailed information and SARS refuses to take that into account and arrive at what should be the correct decision. Without boring you with too much of the details, in the Promotion of Administrative Justice Act, there's a specific area when it comes to looking at the unlawful conduct of an administrator such as SARS, if they have failed to take into account something that they should have taken into account. That is a particular line of defense. That is a basis for you setting aside a decision made by them. So don't take this lightly. It's very, very important. Proactive tax risk management. This is a difficult area for smaller businesses, because you don't have capacity to do so. But systems such as those made available by Greatsoft, together with your auditor accountant, you should be able to conduct at least some form of internal mock audit, or run data analytics to detect any potential anomalies, be aware of what VAT, PAE, and income tax data-driven audits are taking place in the industry. Your auditors or tax accountants who are acting for a variety of clients in that industry would be well placed to identify areas of concern, because they will most likely be helping clients in a similar area elsewhere. So, those are things that need to be addressed from time to time. In large corporations, I say the Tax Risk Management Committee should meet every 3 months. I would say in a small organization, at least every 6 months, you should be conducting a meeting with your auditor or with your accountant to say, look, is there anything in our business that we should be looking into in preparation for what might be an exposure to SARS, simply because we happen to be in the wrong industry. Not a bad thing to do. Again, as I mentioned, the policy kicks in the moment that tax audit starts. So, there you've got that additional security. You've got additional equity available to you. Then, as far as legal remedies, I will be spending a lot of time. Of course, the objection and appeal process, the High Court review is typically where you would challenge SARS on failure to address a letter of findings or similar defects in what they do. Normally, you are compelled to go to the tax court, but there are exceptions where you can approach the High Court immediately, and I'll unpack that in a later webinar, and where you're able to obtain what we call declaratory relief, and you don't have to go the full length of a tax trial. A taxpayer to have to go through. So key takeaways: SARS audits are risk-based and artificial intelligence driven. Know your rights, maintain documentation and control, engage proactively and strategically. That's a lot of information. So I'm going to hand over to you, and if there are any questions, I'm more than happy to address them.
Thanks, Daniel. There are quite a few questions, but I think what I'll do is let me just run through the details. You've spoken a lot about the policy, but I think it would be amiss to inform people how to access it, to give them appropriate protection. So I'm literally going to take 5 minutes just to run through the highlights of what we do and where we placed, and then maybe we can get into some of the questions, if that's okay with you. Daniel, can you just let me know if you can see my presentation set up?
Yeah, yes, I can. Thank you.
All right, brilliant. Like I said, I'm literally going to take 5 minutes to see if I can run through this presentation for you about what tax risk insurance does. So this is an affordable way for your clients, for the small to medium enterprises, to buy in the sort of expertise that Daniel's been talking about. So it's effective insurance against SARS tax audits and related disputes. It's available to individuals, to businesses, and to trusts. So if you're selected for an audit, or if there's a dispute that needs to be sorted out, the policy will appoint and pay for the team of tax professionals to sort that matter out. Importantly, what we pay for includes your fee as the tax practitioner, as your client's representative for the duration of the claim. So you become a central part of that team. So these are the clients that can benefit from our product: companies, trust, business owners and directors, and high net worth individuals. Salaried earners can buy the product, but of course their taxes aren't as complex as high net worth individuals and business owners and directors. So they fall outside of our target market, but if they insist they want the cover, there's no reason why a salaried employee cannot also buy the cover. These are the taxes that we cover. It's income tax, VAT disputes, employment tax disputes, capital gains tax. We will cover everything into the tax board. If it needs to go to the tax court, it's included within the indemnity limits. So almost all local taxes are covered. When I say almost all local taxes, there's specific taxes that we don't cover, and we'll get to that now, and local taxes. So we concentrate on local taxes. So not cross-border transactions is not part of the cover. We concentrate our efforts on the bulk majority of taxpayers in South Africa that can benefit from this cover. So this is a summary of what we don't cover. You don't need to memorize all of this. By the way, after the session, I will send you an email with a brochure that summarizes what I've spoken about, which you can present to your client if you want to bring your client on. So we don't cover tax evasion. Clearly, that's fraud, income generated outside of South Africa, international tax like customs and excise, exchange control, transfer pricing, that sort of thing is excluded. As I said, we cover local taxes. Employment tax incentives is a specific category of tax we don't cover. I don't want to get into the detail now because of the lack of time, but there's specific reasons why we've excluded employment tax incentives. Then, of course, the normal preparation of your tax returns and the supply of routine supporting information. Verifications are not covered. Verifications we see as part of your normal tax paying obligations. So that's not covered. It's what comes after the verification. So the audit and the dispute that follows after that. And then the actual back taxes, penalties and interest if there's anything legitimately applied. So you can't clients short payment of taxes. If at the end of the day, in the final analysis, it's apparent that the client did underpay his taxes, we will go to the client and say, you do owe SARS the money. But we'll also then negotiate around the interest and penalties to make sure those are legitimate and to see if we can get favorable terms on those interest and penalties. So the benefits, it moves the uncertainty of an unexpected SARS audit. So at the moment, your clients and yourselves are self-insuring that risk. If you're getting sideswiped by SARS, it's coming out of your own pocket. You are bearing the own risk, and we provide you with the opportunity now to insure that risk at very affordable monthly premiums. We'll have a look at that shortly. Cover is retrospective, and there's no waiting period. So if you start your cover today and SARS writes you a letter next week about a problem from 5 years ago, you are on cover. There's only, just to, as an asterisk there, we won't cover an existing issue. So if you buy the policy today and there's an existing problem that's on the go, we will ring fence that problem and you will need to sort that out yourselves. And as soon as you've sorted that, we'll bring that back into the cover. Some of South Africa's best tax specialists are appointed. Daniel has spoken about that at length. Your own fees as the tax practitioner are covered for the duration of the claim, and it's peace of mind when you need it most. So this is what an application form looks like. It's the same application form. Doesn't matter if you're an individual, a company, or a trust. There's a indicator that indicates which category you fall in. Importantly, each taxpayer buys their own policy. So if you're a group of companies with some shareholders and directors, each of those taxpaying entities buy their own cover. This is what the rates looks like. I'm not going to delve in too much because of the lack of time, but effectively it's a simple rate chart for companies. We look at the company's annual turnover and that determines the rate. For individuals, we look at the individual's taxable income, annual taxable income, and that determines your premium. And it's on the application form. So you can quite easily identify what your premium is going to be for your specific type of business. So smaller businesses pay less, larger businesses pay more. It's fairly straightforward. Our application form also then includes a summary of cover. It's a one-pager. It pretty much summarizes what the terms and conditions are, what's covered, what's not covered. So it's very useful for your client to understand at a glance what the cover looks like. Of course, it summarizes the full policy terms and conditions, which is a normal insurance policy contract, but it's a useful summary of what's in and what's out in terms of the cover, and it forms part of our application form. So it's very simple and easy, 3-page application form. That just drills down on what the premiums look like, but we're going to skip that for now. There's also a stand-up brochure that you can, if you want to put it in your office for your clients to take. It's exactly the same thing, with the inside being the application form, the outside being the summary of the cover, and then there's an inlay that provides you with the premium tables and the indemnity limits of the policy. So importantly, these are the players in the team. So we're the underwriting manager. We underwrite on behalf of Bright Insurance Company. Bright's the insurance license behind this. And we write all our products through a national network of insurance brokers. So if you'd like to access the product, speak to your own insurance broker. And if your insurance broker doesn't offer the product, speak to me and I will put you into contact with an insurance broker in your area that can help you out. We have a national network of approved insurance brokers. So please have a chat with your broker. If you're unsure, please have a chat with me and I'll link you up with our brokers. There's also a lot of information on our website, www.taxrisk.co.za. If you're an accounting practitioner, a tax practitioner, you go to the accountants page on that website and it gives you a whole bunch of information which is relevant for tax practitioners. There's my contact information. By all means, send me a note and I'll be more than happy to help you out on that. As I said, I will, during the course of probably tomorrow, send you an email so you'll have my contact details and a summary of the stuff in any event. Right, Daniel, that's the end of my my quick presentation. So we try to deal with a few Q&As.
Yes, certainly.
Right, so we have one. Let me just open the Q&A page here on my computer. Jaco Barnhorst asked Dr. Daniel a bit of off topic. Any advice with the process of disputing and assessment of admin penalties, specifically with regards to zero returns and dormant companies?
No, not off the top of my head. I will attempt to address that in the third webinar, where I sort of delve a little bit more deeply into the dispute process. If you could maybe just formulate that in an email to me in a little bit more detail, so I can just understand exactly what the issue is, and I'll reflect on that.
Okay, great, thanks. Martin Barnard, hello Martin. He asked, does the revised assessment explanation as per section 42 also apply to customs?
No, unfortunately not. Customs was supposed to have new legislation brought into play, but that's been delayed to the best of my knowledge. But all legislation is subject to the provisions of the Constitution and the Promotion of Administrative Justice Act. And Section 42 and the reasons is something that comes directly out of the Constitution and the Promotion of Administrative Justice Act. So we would just go a slightly different route when it comes to customs and excise in insisting on the same process and procedure being applied. So without going into more detail, that would be my answer to that.
Thank you. Elena asked, what is the prescribed period for SARS to do an audit? Can they go back more than 5 years?
So that depends on whether there's been non-disclosure on the part of the taxpayer, and that is very much an open question, and that's been the subject of many tax cases. Typically, there are different periods. Your typical period is 3 years. Some cases it's 5 years. So one would assume that SARS would typically stick to the 3 or 5 year period. If they go back more than that, there is a duty upon them to explain what the non-disclosure has been. So you would then interrogate that in the original audit notice from SARS and see what explanation comes forward. And if that explanation is not there, there are potential defenses that could be developed going forward.
Right, thanks. Dylan, also interesting question. He said, would a line of defense not to be to leave SARS to mess up, such as failing to issue a letter of finding so that their revised verification process can be put aside rather than to warn them so explicitly beforehand?
So, I mean, that is a good question. In my view, if SARS have messed up and you set the assessment aside, there's nothing stopping them from coming back at you. Now, of course, if this is all taking place near the prescription period coming to an end, then you might decide to follow the suggestion made by you, because then you would let them mess up, have the assessment set aside, and that would be the end of any review of that period unless there's been non-disclosure. The problem with that is you've got no absolute control. So I'm always of the view that you're wanting to control the process and wanting to know exactly what they're looking at, because the mere fact that it's been set aside doesn't mean to say that they won't take a second bite at the cherry, depending on what the problem is. It might be a problem that reoccurs in future years. So it is very, very much fact specific, but there may be instances where that might be the correct strategy, but certainly not always.
We have 4 minutes left, so let's take one more question, maybe 2. We'll see how it goes. I had a client that was verified and we submitted all supporting documents. They came back and requested additional information, which we responded with a letter saying that we have uploaded everything together with the relevant schedules in the first upload, and that they must please indicate which particular expenses they want a separate upload for. We then had no response and the client received a revised assessment. Is that one of the cases where we can apply Section 42?
Absolutely. Absolutely. Definite transgression.
Well, that's quite straightforward and simple. I have 2 clients where an investigation has been launched by SARS for the director to be held personally liable for the company debt. Any advice here?
So that, you remember I alluded to that at one part of my talk. That's also very much I think it's an abuse. For the most part, it's an abusive process on the part of SARS. It's very much fact specific, and it's something that one would have to look at what the relationship of the person was to the information that SARS are saying they are related to in creating the financial problems within the corporation. Yeah, I mean, I can't give you a definitive answer, but I can tell you that SARS is targeting that area, and they are making a lot of mistakes. With all of these things, you need to really understand the facts. What was the responsibilities of that director? Were they supposed to be involved in the financial aspects of the business insofar as there was any sort of, as far as the tax compliance responsibilities go? So that would be a starting point. But again, I mentioned this is where specialist advice is required, and it is one of the areas where going forward you would look to, in a smaller business, have the policy cover you on that type of exposure. But yeah, you would need to address the facts there, and what were the responsibilities, what are SARS suggesting the involvement of the director is to have contributed to the financial demise from a tax compliance point of view.
Okay, great, thanks, Daniel. I think on that note we can close the session off. Thank you very much for your presentations. I found it very informative. I'm sure the rest of the audience did also. Thank you to the audience, and thank you to Greatsoft for setting this up for us. We did enjoy having you here. If you have any questions, please direct it to me and I'll channel it in the right direction. Again, my email address is willem@taxrisk.co.za. I will be sending you an email, as I said, during the course of tomorrow, just to give you some information and some contact details. But other than that, we hope to see you at the next webinar, which is on the 22nd of October, just to make sure that's the one. And then the last one is on the 6th of November. So please keep an eye out for the emails to register for those events also. So thank you very much for your attendance, and enjoy the rest of your afternoon. Thank you.
Thank you, everyone. Thanks a lot.